Hey, what's going on, guys? It's Ricky with Tech Solutions. I hope that you guys are all having an amazing day. And in this video, I'm going to be talking about how to consistently grow your account. And in this video, I'm going to be talking about the 4 different stages that I believe can truly provide a lot of structure for new traders that are just getting started. This is not the only way on how to get started, but I hope that my insight can at least provide some structure and act as a catalyst for your success in the stock market. I hope you guys enjoy. Boom, boom, boom. All right, guys, so let's go ahead and get started. And first of all, I want to apologize for my penmanship. As you guys can see, I don't really know how to evenly divide the stage 1, 2, 3, and 4 in equal 4 places, but that's not the important part. I'm gonna go ahead and get the camera in a little bit closer and explain and elaborate about each stage and why it is that I think that, you know, understanding these different stages and then maybe you being able to identify which stage you are in based on your trading experience can have and provide a little bit more structure to get you on the right track to whatever your goal is. So I really hope that you guys enjoyed this video. All right, let's go ahead and get started. So this is for stage 1. For stage 1, one thing that I would really like for a lot of new traders to focus on is on quality patterns. I do have a video on YouTube and I'm gonna try to do my best. It should be one of the links down below. Quality patterns, the way that I like to identify it is no downward patterns. So the timeframes that I like to focus on are on the 180-day 4-hour timeframes. I do have the video that is going to explain a little bit more in detail what I mean by ascending uptrend patterns and horizontal patterns. All I want you guys to focus on is on big picture patterns that the overall direction of whatever it is that you are investing in is not actively trending down. A perfect example of something what I think would be to avoid because of its aggressive descending pattern would be something like TOPS, HMNY, due to its overall, you know, pump and dump kind of characteristics and obvious forms of manipulation. I would like to focus on much more ascending uptrend patterns, something that, you know, continues to make higher highs, something that usually continues to recover, because if you're investing to grow your account, you want to make sure that the overall patterns that you choose to invest in kind of meet that same criteria. So that's why I think that focusing on quality patterns can be a huge incentive for a lot of new traders that are just getting started. And it's just something that, you know, you guys can write down and become a little bit more familiar with and ask yourself, you know, have you been focusing on that? And if not, maybe that's an area of opportunity for yourself. The second thing is obviously no downtrend. So again, HMNY, TOPS, those are just examples. I'm sorry for those that, you know, like those specific tickers, but I just think that they're very manipulative. They go through a lot of pump and dumps, and it's a very aggressive downward pattern. A huge kind of mistake that a lot of new traders make is bag holding, which means that you hold something and hope that it recovers, but it never actually does. And if you look at the overall pattern of what it is that you know, overall stock has to offer, it offers a very aggressive descending pattern, a very aggressive down pattern. And that's what I would encourage, you know, you to avoid, especially if, you know, I was just getting started. I wish I was told, you know, to avoid everything that was showing signs of a down pattern. So the next thing is always lock in profits. I think a idea in mind that people have is they get very greedy, that they always think that there's more margins for profit. So the reason that I say always lock in profits is that the easiest way that I can say it is that, you know, no one goes broke by locking in profits. And especially if you're just getting started, just ask yourself, how many times have you been green and then have gone red and then bag held something, and then it's just an overall, you know, like the worst experience. And that's one of the worst feelings, when you're green, when you go to red, and then it ends up slowly recovering, and then you're like, maybe it'll go back to where it was when I was green, and then it continues to sell off. You're like, dang it, I should have locked in profits. Again, area of opportunity. I never think it's a bad idea to lock in profits. Yes, as you're just getting started, sometimes you might have times that, you know, it continues to uptrend, but again, that's the whole point of these different stages, is first get the ball rolling, focus on locking in profits, and as you become more familiar with, you know, maybe how much more it is that it has to offer, and in refining your style of trading, that will be something that we'll talk about in just a little bit, but how you can try to maximize profits later down the road. But when just getting started, anytime that you are green and you're seeing any form of indication of a pullback or a resistance, it's not a bad idea to lock in profits. And again, if you're green, then you're doing something that 95% of the market can't do, and I want to congratulate you for that. So the next thing is setting a goal, right? Not a dollar goal, but everyone starts with a different size account. And one of the most common questions is always like, Ricky, what account size should I start out with? First of all, I would encourage you to start paper trading, which means with fake money, and focus on continuously growing your account based on percentage growth. It's something that has truly acted as a catalyst for a lot of the members within our Learn Plan Profit group, which is the private group that I mentor, as well as those that are part of TechBut Solutions. TechBut Solutions is my free group. I have over 100,000 members within our free trading community. The link should be down below if you guys want to check it out. You guys don't have to join if you guys don't want to. But altogether, one of the biggest factors that has assisted them in their success is due to the idea of not focusing on a dollar profit, but focusing on percentage growth. And again, that's something that you will become a little bit more familiar with on how to identify that, on how much margin or percentage potential for profit it has to offer. And I do have videos on that, both on YouTube and in the Learn Plan Profit lesson library. And then the last thing that I kind of want to focus on is for people that are just getting started, I think focusing on a range of stocks or ETFs that are in the price range of $10 to $50 is pretty realistic, right? Even if your account is $50, people always ask like, oh, shouldn't I trade lower cap stocks so I can buy more shares and stuff like that? No, it's all about the quality. It's all about the margin of profit that stock has to offer. And if a $50 stock has to offer 5%, and you only buy one share, that doesn't matter. It's still gonna grow your account, grow your overall account 5%, right? If you have $50 to your name, $50 in your Robinhood account, then if that margin of profit is 5%, it doesn't matter if you could only buy one share. Your account will grow 5%. If you're investing in a low cap stock that's $1 and it offers 1% margin, that doesn't make it any better than a $50 stock. Again, it just makes it even probably that much more risky because it's a lower cap stock, which means that it probably is a little bit more volatile and it could be manipulated a little bit easier. So again, I think that a good price range for a lot of new traders to focus on is within the price range of $10 to $50 is where I would get started. But be sure to check out the different stocks that you have in your watch list and see if this would be a good fit for yourself. But I would say try to keep it in the higher 10s, maybe even higher 20s if you feel comfortable doing that. So that is stage one for new traders. Now, stage two, something that is a little bit different is the weekly percentage growth goal, right? I think 3 to 5%, maybe being a little bit more aggressive. So focusing on right here I have it. So short-term swing trading is something that I think that a lot of people can benefit from. So instead of looking at solely just day trades, focusing on kind of longer patterns. So looking at 20-day 1 hour analysis, looking at 180-day 4 hour analysis, and trying to identify a margin of profit of 3 to 5% a week. And why or how is it that you can do this? A very quick example is I trade a lot of ETFs, and something that I like to focus on, let's say just for example, let's say something like UGAS, right? UGAS tends to offer within a weekly period, right now it offers within the support and the resistance about a 6% margin. So if I'm able to identify that horizontal pattern for UGAS, the support and resistance offers a 6% margin, something that I can do is I can set my alerts for when it approaches its support. Once I see signs of a reversal, and then I can identify that, hey, it's starting to show signs of a potential reversal and it's validating that previous support, confirmation is key, right? Then maybe I can focus on just taking one position for that entire week. And that is something that a lot of new traders don't do. They try to take a position almost every single day. And I think that's one of the biggest mistakes that a lot of people make. It's called over trading, right? And how about this? Focus on quality when you're just getting started. So again, quality patterns, which also means like quality trades. So making sure that instead of trying to take one position every single day, most of you are probably gonna be under the PDT rule. Let that act as an incentive for you so you can focus on quality. So instead of trying to take, one position every single day, or 3 times a day, or 3 times a week, right, for the PDT rule, and trying to make 2% per trade, how about you just try to focus on a quality pattern? You do your due diligence, right? You do your technical analysis, and you try to find a stock or ETF that is actively trending up, that offers a margin of about 3 to 5%, and just take one position for that week. You understand the pattern, you understand the direction that it's pointing up, you understand that it's a much more probably conservative position that you can take, and it offers still your weekly percentage growth goal. And that's something that I think that I would do if I was in the stage 2 category. The price range that I think that we could focus on is, I brought the lower dollar value a little bit lower. It's gonna be about $5, and then focusing at a higher price range of about $100, because there's a good amount of ETFs and mid-cap stocks that fall under that category for that price target. We already talked about quality patterns. patterns. So again, still focusing on ascending uptrend patterns and horizontal patterns, and obviously no downward patterns, right? And then short-term swing trading, meaning that not just focusing on day trades, but focusing on holding a position for about maybe even just one full, like maybe not just within one day, but holding it for a number of days, all week, kind of within a week. A lot of kind of these positions, an example can be something like, again, UGAS and DGAS that I tend to trade pretty often. You know, I can tend to cover anywhere from around 3 to 5% just by a short-term swing trade, and it usually lasts about 2 days. And again, it's something that I see value in. It's something that I trade. It's not something that I would encourage you to do for that specific ETF. I'm just giving you an example. But you know, if you identify a pattern and it's consistent and it tends to bounce at a certain price point, it tends to peak out at a certain price point, you tend to pick up kind of on these patterns, right? And sometimes you just have to hold it for about 1 or 2 days for it to perform the way that you expect it to. And again, confirmation is key, so let's make sure that we still focus on that. And then always lock in profits. I still think that regardless if you're in stage 2, I still think that's crucial. So if you're green and you see any form of indication, again, focus on just getting that ball rolling, focus on growing that account, building that confidence, and refining yourself as a trader, and always lock in profits. Every time that you're green and you're starting to see a pullback, don't get greedy. Just think about 10 months, 10 years down the road. Is it really going to matter if you make an extra, 1 to 2%? No. But what is going to matter is if you end up taking a huge loss, you're never going to want to trade again, right? And that's much more important to me. So make sure that you focus on growing your account, teaching yourself that you do know how to grow your account. And then as time goes on, then you can focus on trying to maximize overall profits. But again, always lock in profits. All right, and now moving on to stage 3. This is the juicy stuff. All right, so stage 3 is 5 to 7% a week. Definitely a little bit more aggressive. So stage 3 would be people that have gone and made the transition from paper trading to full-time trading and have consistently been able to grow their account for about 3 to 5%, maybe for about 2 to 3 months already. If you want to go a little bit more aggressive and set that price percentage or that percentage weekly target at around 5 to 7%, I definitely find that to be very realistic, especially for those that have been a part of the Learn, Plan, Profit and TechClub Solutions community. Now, test out buy dips if you understand the overall patterns. This isn't something that I would recommend for everyone because we're all wired in different ways, but something that you might want to become a little bit more familiar with, just because they do offer potential, is, again, we were talking about only focusing on ascending uptrend patterns and horizontal patterns within these 2 stages. Now we're talking about, hey, maybe being able to do some dip buys. But again, you need to become more familiar with these overall patterns and how it is to actually profit off of them. And that's just going to take more time. So I would first encourage you to test it out with paper trading. And if you could see that you do experience success with these descending dip buys and being able to sell with the lower highs, and again, this is not going to make sense if you're just getting started, but for those that it does make a little bit sense to, just make sure that you invest a little bit more time in learning about those patterns, testing it out with simulation trading, which means with no monetary risk. And then if you can refine kind of that characteristic and that strategy, then great, maybe you could implement it to real style of trading. And then the next thing is, again, I would still not suggest to focus on penny stocks. I still think that, again, even in stage 3, it might be something that you might want to avoid. I still don't want you guys to get discouraged. I still want you guys to focus on continuously growing your account. And that is why we are going to bring up the golden ratio. So as you get to stage 3, you might feel a little bit more comfortable taking it kind of like little riskier positions. All I ask you to consider is something that we've talked about in the Learn, Plan, Profit lesson library, and that is the golden ratio. So what that means is that the overall margin of profit exceeds the margin of loss of what it has to offer. So what do I mean by that? Let's say that there is this like kind of horizontal pattern, right? This horizontal pattern, let's say a support at $5 and a resistance at like $5.50, right? So it offers a 10% margin. But let's say if it breaks the support at $5, that's kind of a break of pattern, but you give it a 2% kind of stop loss, right? Meaning that you give it 2% to kind of move around below $5, just because sometimes it takes a little bit more to consolidate. Well, the overall golden ratio would mean that, all right, well, it offers 10% margin for profit and it offers 2% potential for loss because of your stop loss. So overall, I mean, you could, if you focus on that type of quality of trades, right, on a consistent basis, you can end up taking 3 of those trades. And even if you end up stop lossing out on 3 of them, you lost 6%. But if just one of them out of the total 4 trades end up performing the way that you expected it to, you still ended up making a total of 4% on that weekly basis. Obviously, I hope that you guys have a higher success rate than 25%, especially getting to the stage 3. But it's just an example on why the golden ratio is so important. We've covered it very carefully within the Learn, Plan, Profit lesson library, giving a lot of examples on why it's so important to focus on the golden ratio and quality positions, and just making sure that that risk management is there. Obviously, manage risk as you get into riskier positions and ones that offer maybe a little bit more potential for profit. They also are known to cause or offer a little bit more potential for loss. So let's just make sure that that risk management is never left behind. That has to always be something that you keep on the back of your head. If you're always focusing on growing your account but you have no defense, you might be growing your account 40% in 1 month, but it just might take one bad position for you to just drain your account and bag hold something. And that's why risk management is something that you're going to want to test out. So again, that's why I think simulation trading is ideal, and practicing how to cut losses. Definitely a huge area of opportunity for a lot of people, even myself. Sometimes I still make mistakes even with the years that I've been trading, and even with how experienced and how consistent you guys have seen my total trades to be today. This was my total profits today, and then this was my total profits yesterday. I've been able to consistently grow my account, but again, I still make mistakes. I'm still human, and risk management is just something that I'm always gonna have to work on and always have to try to refine. And it just comes down to being able to handle your emotions and being able to understand the difference of a pullback and a break of pattern. And that's something that we cover a little bit more in detail, again, in the Learn, Plan, Profit lesson library. And then swing trading. So this is where I think a lot of people can benefit, where they start to focus less on day trades and trying to take a position every single day. For someone that's extremely busy like myself, I really like to focus on swing trading. And the reason why is because I minimize the overall positions that I take on the overall month, but it doesn't mean that I make less money. It just means that my overall quality of positions that I focus on offer much more margin or potential for profit than potential for loss, and it just means that it takes a little bit longer to get there. So maybe getting into kind of like longer short-term swing trades, such as instead of about 2 to 3 days, maybe focus on something that's actively trending up or that offers a pretty decent margin of profit based on the reversal, and that offers anywhere from around maybe 10% plus, or something like 7 to 10% potential for profit. And again, sometimes it might take 1 to 2 weeks to get there. But again, is it worth it? It might be, right? If the potential or percentage potential profit is worth it. And that's where opportunity cost comes into play, right? Is it worth holding something for a number of days based on the potential percentage return that it has to offer? Or is it better just to focus on short-term trades, right? And trying to day trade every single time. Also time management. So there's a number of things that go into it, but swing trading is something that when you get to the stage 3 and when you're becoming a little bit more familiar with quality patterns, something that I think that a lot of you guys will truly benefit from. And then stage 4. So 10% a week, 40% a month. That's definitely something that, it's kind of the goal and kind of what to get to. I know a lot of people might be saying 10% a week isn't even that aggressive. Again, it's all about getting the ball rolling and just focusing on consistent growth. I think 40% a month growth is amazing, and I hope that each and every single one of you can actually get there. I just sneezed. But yeah, I still want to make sure that we focus on that golden ratio. If we're approaching something that's a little bit more aggressive, as in 10% a week, it means that we're going to probably be taking a little bit higher risk positions. So let's make sure that golden ratio is something always that we keep on the back of our head. And if it's something that you tend to forget, just make sure that maybe you create a piece of paper, and that wherever it is that you end up trading, make sure that you hang that piece of paper and that you have your criteria sheet or a set list of reminders that you want to make sure that you can visually see every single time before you take a position. That's actually something that helped me out when I first got started. So the next thing that I want to talk about is refine your style of trading. Just because you're in the stage 4 that we like to say, or just because you're a little bit more well versed within the market, doesn't mean that you're going to be perfect, right? You're always going to be making mistakes. You're always going to sometimes not lock in profits early enough. I do that all the time. Sometimes you might lock in profits a little bit too early, and there's going to be an area of opportunity. Again, something that you will experience as time goes on. There is never a time where you should stop learning. And that goes into the next thing. Never stop learning. There's always new things that you can learn. I think TechBot Solutions and the Learn, Plan, Profit lesson library is an amazing community to be a part of, not just to learn how to trade, but to also, be a part of other people's success. We have an amazing group of individuals that once they get to a certain point where they can continuously grow their account, the next stage is kind of helping others get to that point. And that's something that we do very well within both TechBot Solutions and Learn, Plan, Profit, because as you're teaching others what it is that you know and what has led to your success in the market, you learn more yourself, and you're becoming a little bit more obsessed with the market and what it is that you're investing in, and you become a little bit more aware of certain mistakes that you were making before that you are suggesting for others not to make. And then, overall, mentally, you're gonna end up not making them yourself as well, just because it becomes a little bit more apparent. So again, never forget to never stop learning. And then the last thing is lock in profits, right? No one goes broke by locking in profits. So let's make sure that we focus on that. And that is it. We set the goal of the 2 to 3% for just people that are just getting started. Again, it's just about getting that ball rolling. The next thing is about 3 to 5%. The one that follows is 5 to 7%. And the next one is 10% a week. I just wanted to put this into perspective because a lot of people have been approaching me with saying, hey, I have like $500 to start investing. Can I turn that into $3,500 within 1 month? Realistically, just with my style of trading and what it is that I do, I don't find that to be very realistic. It doesn't mean that it's impossible. It just means that with my style of trading, that's definitely not the case. I'm very consistent, I'm very conservative, but it works well for myself, and not only just myself, but the hundreds of thousands of individuals that I mentor, both part of TechBot Solutions and Learn Plan Profit. So I hope that this structure can provide a little bit more guidance and act as a catalyst for your success. I also want to welcome you guys, for all those that want to get started in investing in the stock market. One of the links down below, it's going to say free training. For all those that want to take our free training, it's going to be 100% for free. You do have to have a Facebook account, but it's going to be one of the links down below. Feel free to check it out. We're going to cover support and resistance. We're going to cover day trading strategies that I share, and also swing trading strategies. It's going to become and make you a little bit more familiar with what we offer in the Learn Plan Profit lesson library. And then for all those that want the ability to actually watch me trade live every single day at market open. So I go live, I show my screen, you guys can see me, and then the Learn Plan Profit group tunes on in. They get to watch me trade live every single day, ask me questions every single day in real time. And if you would like to be a part of that and want access to that structured lesson library, then be sure to click that link down below where it says the Learn Plan Profit lesson library. And then the last thing is our free Facebook group. Don't forget about that. We have over 100,000 members. And again, surround yourself with like-minded individuals and people that you strive to be like. So altogether, I hope that you guys enjoyed this video. If you guys did, we'd really appreciate the thumbs up. If you guys have not subscribed, I do upload daily videos, both investing in the stock market and the different markets that I invest in. For those that aren't familiar with who it is that I am, be sure to browse around my YouTube channel and kind of like become a little bit more familiar with who it is that I am, what it is that I do, and the different markets that I invest in. Very quick breakdown on myself. I'm 23 years old. I'm one of the youngest millionaires here in Gilbert, Arizona. And I have a series of supercars. I have a series of properties, and I invest in a series of different markets as well. I would love to be a part of your success if you see value in me. If you're solely going to join either my TechBot Solutions group or even my paid group for Learn Plan Profit for me to tell you what to trade, please don't, because I will never tell you where to buy. I will never tell you where to sell. I do not sell alerts. I don't believe in that. I don't believe in spoon feeding. I believe in educating people on how I identify patterns and how I see potential, and working with them on that. I work with this group every single day. I invest hours of my day, right, with this group, and it's because I want to see that output from these individuals. And that's really just it. If you're willing to dedicate time, and if you're willing to dedicate the effort that is needed to continuously grow your account, consistently and steadily, and it is going to take time, but if this is a market that you're passionate about, I would absolutely love to be a part of your success. If you're someone that wants to be spoon-fed, wants to be told where to buy, where to sell, then I can encourage you that this community is not going to be for you. But again, altogether, guys, thank you guys again for everything that you guys do. Continue working hard, continue following your dreams, let your passion be what drives your success. And like always, let's make sure that we end the year on a green note. Take it easy, team.